Good morning, everybody. This is Jeff Scott. As you can see in the lower right-hand corner, it is approximately 10:33 on August 27, 2017, and this is my top-down review, which for today I'm renaming, because of what I'm doing, Bagels and Locks with the high growth stock. Doc, I titled today Risk Rising. Now, in medicine, which is where I live most of the time, the government has models of risk that are two-sided. Two-sided means you can make money if you do a good job, lose money if you don't. And I'm not convinced that the risk here is not only one-sided, that there still is a risk to the upside here. This is not an obvious collapse of the market, but obviously that's what you're going to hear on CNBC. That's what you have to make your own judgment. And even I am positioning my portfolio for what I don't know is going to happen, such as a black swan event. Disclaimer, for education purposes only, any recommendations in the spirit of education, not investment advice. I'm a doctor, not a broker. I have no licenses as far as SECs and other trading bureaus. I don't even know what they're called because I don't have them. I'm not a certified market technician. I am just a regular Joe. In my case, Jeff. I'm not affiliated with any software vendor or trading company. Tools demonstrate those I use in my daily trading. I have paid for everything I show you. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. I like to title my education, my presentations, everything about be your own guru. Find, you don't have to discover the next greatest stock, product, education, tool, indicator by yourself. What you need to do is you need to learn. You need to be educated. You need to then put together your own system of what you think matters and become your own guru, something that was taught to me by Ian Woodward 20 years ago. So I'm based upon CanSlim, taught by O'Neill, improved by Morales and Catcher, taken to the computer and improved again by Ian Woodward and Ron Brown, blended with the teachings of John Person, who's just a great trader, has got some great indicators that are part of Thinkorswim and TradeStation and Ninja, Genesis, etc., and has become a good friend, author, etc. Position size and money management, Van Tharp's the best. George Lee's my trading buddy from Canada. And then Guy Cohen, who, for those of you who are looking for some more base education as well as advanced education, we're also looking at some websites with some great scanners that can make your life perhaps a little bit easier. And a guy who fits the thinking of my other folks here is Guy Cohen. He's also an excellent teacher. Just to remind everybody, I talked to Mary, I played golf with Mary Person this week, and she pointed out that there's only a couple seats left. It's Thursday, Friday, and Saturday, November 30th through December 2nd. I will talk about my meeting in a second. I think it's in the $1,500 range. I know she has a list price, and there was a discounted price on the website, www.personsplanet.com. Phone number is there as well. And then my email address should you need to contact me for my one-day meeting. My one-day meeting will be the only live HGSI doc meeting I'm doing this year, although I will do some cameos during John's. Join me as I demonstrate and teach my favorite tools and strategies that have led me to a seven-figure return this year, merging my learnings from Ian and JP. I'm not tied to my computer during the day, require less than an hour each night, and I continue to work full-time building another company, just bought a new boat, play golf, so I try to have a life beyond just trading. Topics will be HGS principles learned from Ian, how I find my best trades, how I manage the trade, how I use options to increase return, how I find them in TradeStation and Thinkorswim, and then putting it all together. Housekeeping, it'll be at the Palm Beach Hilton Garden Inn with John's meeting. Cost will be $400 if you attend John's, $500 if you don't. Do not call and ask for the videos by themselves. I do not sell them by themselves. I don't do this to make money. I do this to have a good time, help some people out, and to break even. And it's not fair to those that actually pay the cost of attending for me to give those away for free. So don't even ask. If you want them and you don't want to do the cost of travel, then just sign up and don't show up. I'm limiting it to 12 attendees. I include breakfast and lunch during the meeting. And for people who've been to my prior meetings knows that the way I make sure that I don't make any money on the meetings is we have an over-the-top dinner on Saturday. This will not be any different. MP4 videos of each presentation as well as slides will be given to the attendees. I asked them not to share them for the same reason that I mentioned to you. It's not fair to others who make the investment, who spend the time here for me just to give it away. DT, you know who you are, just confirming I received your check. I have a lot of programs, but you'll see I use mostly TradeStation, Thinkorswim, HGSI, and EdgeRater. There are a number of websites that I find useful. One thing to let you know is Genesis is a great program. I use it every day, but if you're not trading futures, it's not provided to me by free by any of the brokers. I pay about $2,000 a year. You have to have the volume to make it make sense and use it. HighGrowthStock.com is the website. Again, I have no financial relationship. I don't get commissions. I don't get spiffs. I don't get discounts. All I get is the opportunity to beg to get things that I want put into the software. Up here in my right here says free 30-day trial. It's truly free. They don't even ask you for a credit card. I will tell you in this day and age, I think that's nuts. Everybody wants a credit card for you to sign up because I think it's a much higher chance that you're going to stick around if you actually give them a credit card and forget to turn it off. Maybe I'm the only person that does that all the time, but what a great deal. The other thing is up at the top, you have something called investing strategies, and you'll find there are a number of videos by myself and Ron Brown and others. As always, I have a basic 6-pack of videos that I offer for free for anybody that like to try it, who's new to HGSI especially. If you're already using it, don't bother. It's basic, but it's things that help people learn the buttons and how to navigate. And all you gotta do is email hgsidoc@gmail.com. I'll send you a Word document, and then you just download from my Dropbox. Stock patterns are cyclical, and I wish I could tell you that we were in an easy place, that we were down here and everything is green, or we're up here in the sell circle and everything is red. We're not. We continue to oscillate around the top. Tops are processes, bottoms are events. This is a process that's it may take many more months to a couple of years, where you get just when you think you've had your 3 to 4% correction, and the bottom's going to drop, you take off with another leg up. We started moving up last week. It wasn't the same move up that I've seen on some of the prior bounces, which makes me a little bit suspect, and which is why I think there's still significant risk to the downside. You have to play different based upon where you are. For me, with this level of uncertainty, it's cash being raised, smaller positions, selling premium against either nothing or against existing positions. Now, despite my negative bias, or a little bit of negative biases, you can see that it was a very bullish end of the market on Friday. Where is their weakness? Healthcare, especially biotech, looks horrible. Transports, which have been getting up, are all green. You notice that the energy started to show some green, probably related to the hurricane. Financials are still mixed, although regionals and brokers look better than the big banks. Technology weak, semis weak. So clearly there's been market rotation since biotech has been strong of late, as have some of the semiconductors, and utilities also have been strong. I have no doubt that I probably annoy some people with the amount of time I spend on looking at the market, but frankly, the market is everything. If the market has futures are up 100 Dow points, 27 NASDAQ points, and 9 S&P points tonight, you know that everything's going up tomorrow. Since North Korea shot some undisclosed projectiles on Friday night, maybe the market's going to open down 100 points. Well, where the market opens and where it closes, excuse me, I always have allergies when I do these, is going to determine what your stocks do as much as anything else. So you got to know the market. So when I look at daily charts here, and let's go into, I think it's easier to look at this in my Thinkorswim. So let's go to daily charts, and let's go to my futures. Let's maximize. Okay, So here is the S&P 500. I'm going to look at it a lot of different ways. So we see on-balance volume peaked here and has been trending down. I look at this, it's been a long-term uptrend. It's really, look at where we are today, kind of goes back to where we were in June, so it's not done much in the last 2.5 months. We're sitting right below the 50-day moving average. The 17 is about to cross below the 50. Do we go back up from here, or do we come back and test the 200? If I was sitting down on the 200, I'd say we're going to go up from here. I think there's an indecision point here, and we need to be careful. Notice here is a John Person PPS sell signal, which is a free indicator on Thinkorswim. We look at the NASDAQ. Only thing different here, besides the OBV being up near the high, is that we're above the yellow, which is the 50-day moving average. Actually, to me, that's a big difference, as I'd like to see it bounce from here, but time will tell. In reality, it's something that I think can also go either way. I look at the Dow, which has been the strongest. We've had a couple of dojis days in a row. Notice the OBV is pointing up here and is at or near the high of the entire time, and we're above the 50. Now, we traded up to the 17-day and failed yesterday, or Friday, but the Dow looks stronger. The weakest of the bunch is the Russell, and you can see on the IWM that it broke below support here at the 200, and now it failed its support on Friday, but we're sitting right underneath the 17 and the 200. We had a doji, and we have a brand new PPS buy signal. Notice how low OBV is. What has not been working well is the VIX. It shoots up and then it comes back down. Now it's still higher than it's been historically. It's still got a long ways to go. So there's still some heightened volatility. And clearly as we go into September, one might expect the volatility to increase. So this is a 17 that's rising, 50 is rising, the stock's above the 200. And then down in the toilet, so to speak, is the dollar that looks like it hit a fresh low. So I might just go to let's go to a weekly. And so this is the lowest the dollar's been since January of 2014. So pretty big move down on the dollar. Man, I apologize for the sound effects. Imagine my wife. She deals with that all the time with my allergies. All right, so let me close this up. And now let's switch to the weeklies to take a look at what the weeklies look like. And I am all about indexes like this. All right, because to me, this is where the money is. Top-down investing. Stocks are driven first by the market, then by the individual industry group, and last by the stock. Now, here's a more bullish assessment. E-minis tracking right on the 17-week moving average. Looks like a shallow pullback as it's done multiple times before, and it bounced off the 17 this past week. OBV looks okay. That looks healthy to me. NQs, there's a weekly sell signal, but it bounced, and you have a doji sitting on the 17-day. I don't like where the volume has fallen off to, but is this any different than this? Is this any different than this? Than this? I don't know. Too early to tell, but it doesn't look that ominous. Then I look at the Dow. It too is in a shallow pullback and above its moving averages. I look at the Russell, and we're not going to see anything there, so let's change that to the IWM. And it's pulled back to the 50 weekly moving average where it bounced. The VIX on the weekly can't stay above the 200 weekly. And then the dollar we've already showed you is pretty weak. And on the weekly, it's probably still weak. And that's not going to work, so I got to change that to this symbol, dollar DXY. I've got a lot of computers, and they're not all up to date. I don't use them every day. All right, here we go. I'm sorry. So it's a dollar DXY. There you go, and you can see the dollar is down to the 500 weekly moving average as well. So Very interesting, and it shows a lot of, obviously, weakness in the dollar. So, am I massively bearish here? I can't be. I look at those weekly charts, and I still see a market that might be going higher. But I've also got to be realistic and recognize that we're probably closer to a top than we are to a bottom. Hence my comments earlier about risk being perhaps more balanced than we think. So then I like to look at my Genesis charts because I can get all these indices. First one down is the E-minis, then the NQs, then the TFs, IWMs, and then the NYSE, and then the YMs. Oh, excuse me. And then you've got daily, weekly, and monthly. If you look at the weeklies, you see some looseness up at the top and some sell signals. The monthlies are still going straight up, and a lot of chop on the dailies. So is it the monthlies going to drive this and the market goes higher, or are the weeklies going to pull down the monthlies and the market goes lower? I don't know. You don't know. I have to be prepared and think about what my portfolio might do. Other information I like: 10-year on the left, 30-year on the right, interest rates falling. That's not good for banks, although the regional banks were strong on Friday, which was probably driven by Janet and Draghi comments at Jackson Hole. AD lines, you can't see them well, but they've turned up this past week as the market bounced as I thought it might, especially the small stocks. Breadth is where the green arrows are. Stocks above the 200, stocks above the 400, right in the middle. Now, last week I said the market was going to bounce, and the reason it was going to bounce was because I am so sorry for the sound effects. You don't want to have my allergies. Down here in Florida, they don't seem to go away. I said it was going to bounce because we were down here on the 3-month new high, new low, or 13-week new high, new low ratio. And I said we were clearly in a reversal range, and we reversed and we're back up in the middling. The daily and the weekly McClellan, I thought it was interesting. The oscillator crossed above the midline, although the summation index continues to point down. But again, we've got higher lows, lower highs. We'll see where this ends up. Buckets, still bearish with 2/3 of the stocks in the S&P trading below the midline, their Bollinger Bands, yet very few stocks are now below the Bollinger Bands as we move more to a neutral stance. HINDYs, we haven't had a HINDY in the last week. We did have a HINDY on the 16th on the NYSE. I was listening to a webinar by a very smart person. It was for last week, I think, the webinar. And Chris Kacher from Morales and Kacher commented that there were a number of HINDYs on the S&P. I couldn't duplicate that, so I'm not certain. But I could see on the NASDAQ and the NYSE, we were HINDY free for the week. Market tone, we look at where the arrows are identifying this third column here. It's still got yellow and red, so we're in chop instead of all bearish, so that's actually improved. Sector strength, well, we've got last week everything was red except for utilities that were yellow. Now we've got utilities in green. We're still red on what looks like energy and finances, but the rest have gone yellow. So not great sector strength, still choppy, but better than it was. Canaries, these are some of the market leaders as defined here on the right. Now keep in mind, these are my canaries. I dropped Netflix and put in Baidu. There are some canaries in the Woodward and Brown groups that are a little different. Their canaries are sitting on the 50. My canaries are sitting right on their 17-day. Now, is that a bearish chart or a bullish chart or a neutral chart? It might be a topping chart, but to me, it's in the upper right-hand corner. It's above the 50 and above the 200, sitting right at the 17. I'd say this is more bullish than bearish, but to be fair, I called it treading water. I also put together my own index based upon the teachings of Ian about 2 months ago, and I said when this index rolls over, it's time to get out of the market. These are the leaders on the way up. You could see some here. Clearly, some have blown up already. Yet, is this chart bullish, bearish, or neutral? We are well above the 50-day moving average, which is what we kissed last week. We're right below a PSAR dot, which would be a reversal. We're in a squeeze. Again, I'm going to call this bullish to neutral, certainly, except for the red, not bearish. You notice my weekly bongo is still green. Know your news and EPS dates. We've got some employment stuff coming Friday the 1st before the holiday. We'll always have some energy reports basically on Wednesday and Friday. We've got some tips and note settlements here. Looking at how many Fed heads are speaking this week. I don't see a lot of Fed heads speak. That could be good for a change. But you can see it's a medium news week. It's never a light news week when you have the unenjoyment index, as John Person likes to call it. This is not an exhaustive list of earnings, but it's a list of stocks that I trade that have earnings this week. As I say in the bottom, and this quote is mine, although somebody else may have made it too, it is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Now, I'll also tell you that I'm not the world's shortest term trader. One thing that stuck out at me when I read the Market Wizards books years ago was that the biggest money was made by dealing with lots of pullbacks and staying in your positions a long time. And I try and balance that with some of my longer term holdings, which frankly become increasingly more difficult to ride out some of their corrections versus being an active trader. I do both. And what I usually do is I sell puts and calls around my active positions, maybe buy put spreads or collars on my long-term positions around earnings. And that works for me, but everybody's going to be different. But if you don't know when your earnings dates are, you can't help yourself. Market thoughts. It did bounce off support like I said it would. Small stocks rally more as the Russell bounced off support. Growth lags on the week. I'll show you that in a second. Most of my signals neutral, but a bongo is negative on the NYSE, NASDAQ 100, and Russell. Suggest this could be a counter trend rally. September is approaching, which is when many market corrections have occurred, and we haven't had a 5% correction this year. This year ends in a 7. Think about the last time we had a year ending of 7. That was 2007. Not a good year for the market. Think about the 10 years before that. 1997 also was not a great year in the market, so that's something to think about. Yet, some of my longer term, keep me in my long-term holding indicators are still not suggesting a huge drop yet. Typical top-down agenda, and let's get moving. Again, I know some of you get pissed because I spend so much time on my charts. There's a reason for it, or on the market, because that really helps me to determine what I'm going to do. So last week, here's a group performance analysis from closing on Friday the 18th to closing on Friday the 25th. It assumes an investment of $1,000 in each stock. These are the various lists that I watch. First thing you should see is there's a lot more red than there are black. So the market was up. Now I mentioned that growth lagged. How would I say that? Here's the S&P 500 was up 0.72 for the week. My holdings on this measurement were up a little bit underneath that. My buy list for the week was up 1.10. However, the IBD 50 was up only 0.35, and the HGS 100 should be here somewhere, unless I forgot to do it. It'll be here somewhere. Was up 0.20. So growth lagging S&P. Now let's look at the groups that were winning. Best stocks under 15. Stocks and groups to upside 1 to 15. Stocks to downside 1 to 15. Float under 7. Stocks 1 to 30. Does that tell you anything? Certainly tells me some. Tells me small stocks were the stocks to be in this past week. Next, I'm going to go into my trade station, and I'm going to look at my various panel of 5 or 6 indicators on each of the major market indexes. Some of these are free, some of these are part of every program, and 1 or 2 of them you have to actually pay for from third parties not named Jeffrey. So, E-minis. I look at 3 time frames here, and I do this on a daily basis. Daily, weekly, monthly. I look at 5 or 6 things. Number 1, what Am I in a person sell or person buy? I'm in a sell daily, sell weekly, buy monthly. Okay. I look at the color of my paint bar. A red paint bar is from Elder, says it's okay to short or to hold, but I shouldn't buy. A green paint bar says I can buy or hold, I shouldn't short. And a blue says it doesn't tell me what to do. So 5 days ago we were red. I commented how we were 1, 2, 3, 4, 5, how we were below the Bollinger Bands, which is the third thing I look for, and that we were going to recover, and we have somewhat. So that's indicator, color, and bands are the first three. Fourth thing I'm going to look for are these little red dots and sometimes little green dots. They suggest that there could be some MACD divergence. So red dots are bearish, green dots are bullish. You'll notice here on the weekly and here on the daily that sometimes they go for a long time before they kick in. The fifth thing I look for is where am I at in the high jump bar. When I get to be less than 5 to 10, I know I'm bouncing because I'm at one of the lowest days of the last year from an extension perspective. At worst, when I'm above 90, I know I'm going to correct at some point relatively soon. And then I look at my bongos, and we have 3 bongos here. We have a daily, a weekly, and a monthly. And you can see here that the weekly bongo, which is my true buy-sell indicator, is in a sell mode. So I look at the E-minis. It's clearly improved from a week ago. It's still in a dominant sell on the daily and the weekly and a weekly bongo. So improved, but still, to me, more downside risk than upside. Then I look at the YM from the Dow, which we know is stronger, and we can see that where we have a new buy signal on the daily. We have a buy signal on the weekly and a buy on the monthly. We have blue, blue, and I think blue. We're right in the middle of the envelope. We have no divergences currently. We have a 19% and the weekly bongo is green. I look at the Dow, those 30 stocks that we spend so much time on, and they look pretty darn good. So is this going to pull the market higher? That would be nice, wouldn't it? We will see. Then I look at the next one I'll look at is the NASDAQ, same way. And we see we have a sell on the daily, weekly, and a buy on the monthly, sitting right in the middle with blue bars, no divergences. We are at 31%, and like the S&P, which this reminds me of very much, we're in a bongo red. So this is a little bit more bearish than bullish. So the Dow is strongest so far. And then let's look at the ones that bounced this week, the Russell. And what do we see here? We see a new buy signal on Thursday. Again, it gets below the envelope, it bounces up. So buy signal and a sell and a buy. So a new buy signal, blue, red, blue. So still got some bearish tendencies there. Notice how the high jump bar here had pulled down very low. Let's see if I can tell you what that was. Come on. Oh, let's see if I can get that. Sometimes I can get it to come up with a data box. But anyways, high jump is moving up, but still no bongo weekly. So the Russell still is improving more so. So I rank the Dow, followed by the Russell, followed by the NASDAQ and the S&P. Then I like to look at my dollar, and I can see my dollars are worth less money than they were a week ago. Sell for ages, going back until before April. Sell for ages, the whole year. Red, blue, red. 12% weekly and monthly bongos are red. The dollar looks horrible. You would expect gold then to be going through the roof. And interestingly, gold had a back-to-back buy and sell signal this week, but not going through the roof. And we'll talk more about gold later, but look at the high jump. It's the highest high jump, 98% highest high jump of the year. Notice the bongos have gone to green. And just for completeness sake, let's throw up the VIX. Oh, I was looking for something. Where is the VIX? I know it's here somewhere. And the VIX is now in a sell signal on the daily. Interestingly, it's still in a weekly buy signal. All right, so I've learned a lot from that. Then I close that up and I go into HGSI. Let me just clean this up for a second in case I need to use EdgeRater. So I go into Major Markets Plus, and I go to a top-down view, which is just price and volume, what puts more weight on the last 5 days. And most weights on 1 day, then 5 days, then 13 days. We see that gold and silver have been leading, the dollar and volatility at the bottom, and then our stocks are in the middle. So let's take a look at our stocks. We'll spend a few minutes with the S&P 500. And I don't need to spend much because we already know the weekly bond goes in a red, that it's sitting right below the 200, sort of, I don't know if it's wedging a little bit, and currently in an indecision part. We'll have to see where we end up. The Dow should look better. We talked about the Dow being a leader right now. And you can see the Dow is sitting a little bit higher, but really a similar pattern except the bongo is green. Transportations have been clobbered, but transportation actually had a reversal day on Friday. We'll see if it's a one-day reversal, had a kahuna, or if it's just going to continue down. The NASDAQ composite has not been behaving any more than the S&P, say right on the 200. And the big bounce of the week, as we said before, was the Russell 2000, which pulled all the way down here. Now, interesting, I've written this thing several times, and I basically said it remains within a box, and frankly, it's still within its box. It's been going sideways since December. We know the dollar has been horrible. Here's a dollar using the ETF, setting a new multi-year low. The VIX has had a nice run, but pulled back last week below the 200. And then, as I said, gold and silver should be doing great. But as I also said last week, gold is here at what I think will be, well, could be a relatively strong area of resistance. And it failed here again and again. Until gold breaks above that, I'm not going to have a hard time loading the boat on gold. Obviously, it's had a nice run up from here to here and of about 7.4%. So gold strong but at resistance. Silver sitting at resistance at the 200. Miners had a little pop on the week, and they're a little bit stronger than silver as they've broken above their moving averages. Their weekly bond goes green. They actually look like a reasonable trade. All right, next I go down to the industry groups. Let's look at it. Notice when I find it in my designer warehouse, it'll show up in my warehouse view. Now, as you can see, I have 175. Some interesting groups are here. Specifically, let's see if I can get this to work right. Marine shipping near the top. I think I called that out last week. But we've got energy, oil, gas equipment, exploration and production, refiners, and integrated oils all in the top 16. Now, with the hurricane hitting where most of our refining capacity is, I would expect refiners to go up because they'll be able to price their products higher. But I would think that exploration would have a problem because no one's going to buy their products. But energy did well this week. Specialty apparel and footwear, two groups that have been pretty much dead, the Amazon effect, have had a nice week as well. Let's just take a look at what's in some of these groups. Yeah, I'm interested in A&F. Right now I'm in American Eagle Outfitters is the one that I played. Let's take a look. Let's go into my webinar view. And what I like to do is look at the top stocks in each of the top 5 to 10 groups. A&F. Now, weekly bongo went green, mobile breakout from a squeeze, Bible gap up, kahunas breaking out here. I think this looks interesting. Look at the earnings per share coming in. This looks like a turnaround stock or a box 7. It pays a 6.5% dividend yield, which is kind of remarkable. Lots of demand. I like Abercrombie & Fitch, and that's one of the stocks on my buy watch list. Urban Outfitters looks a lot similar pattern, but it's lower in the pattern. No dividend, lots of demand, makes money. Guess is another one I thought was interesting, breaking out here. Now it looks like it's gone too far, and I agree with that. And I put on a weekly and I say, nah, it's got a long ways to go. And look at the earnings per share coming back into Guess, which, believe it or not, according to this, says it pays a 5.7% dividend. So Guess, Abercrombie and Fitch, Burlington Stores had an earnings surprise. DSW's had good earnings. The one I'm in is American Eagle, and then we'll move on. Similar to the others. Something's going on in specialty apparel stores. I think you got to be in some of them. I'm in American Eagles, and I'm thinking about being like a teenager and buying me some Abercrombie and Fitch. Oil and gas services, these have been in deep doo-doo downtrends. Schlumberger will show you what I'm talking about. Do I buy this stock? I have a hard time. Now, why is that? Buying stocks that are in long-term downtrends. It's got lots of resistance here. One day it's going to rally and it's going to work. It does have great earnings per share coming in. It still trades at a big multiple, pays a dividend. Great stock, great company. Long-term will be a great stock. May not be the right time to buy. Notice the weekly bond goes red. One of these bounces are going to work, but you can see there's a lot of bounces here that failed. Rig, OII, Ocean Engineering, Patterson. I just don't get that excited by this patterns. So they're second ranked. They moved up clearly because of the storm. Not yet for me. Exploration and production, similar patterns. These are things that have been destroyed. And one of these days, the bounce is going to work. Now, this is less destroyed than others. It pays a 2.4% dividend. ConocoPhillips, great earnings per share growth, but sitting in the lower right-hand corner in the penalty box. I don't like buying in the penalty box. Newfield Exploration, Pioneer Natural Resources, CNOOC. Now, this one looks different. It's broken out above the 200, pays a dividend. But as I look at these, besides CNOOC, which one of these looks buyable? They all look like they're in horrible downtrends. Again, downtrends end. Maybe this is the end. Maybe I should be loading up the bus. I'd like to see some positive momentum. Airlines have been yesterday's child, have been beaten, destroyed, but now they had a big move on Friday. Let's see. American Airlines, a reversal, still below the 200. Weekly bond goes red. Delta, similar pattern. Southwest, United. So, is this a one day? Now, I thought it was rather interesting to see these things rallying so much when there's a big disruption in airfare, and especially for United Airlines in their Houston hub. But, is it ready to jump in? Maybe. I have to see a little bit of positive momentum, not one day, but maybe it's getting there. Steel raw materials. Now, I'll put Techminco in this group. I'm not sure why it's not showing up here, but we'll look at that one as well. BHP, I don't like that candle. Had a shooting star on Friday. I don't know if let's see if there was any news. Go to more info from Web. Let's go to FinViz, and it'll open up in BHP, and we'll see if anything happened. That was a right click, which opened up that list. All right, so maybe it's about coal. BHP Billiton, I don't like the candle, but I look at others in the group. Valley has been strong, nice move up here, pays a 2.6% dividend. BHP Billiton, Rio Tinto, another stock that's in the iron ore category, also looks strong up the upper right-hand corner. The 4.9% dividend, the one I've been playing, which we've talked about, has been Techminco in the same group. And boy, you can't get much tighter than this. Computer hardware and storage must be so this is a stock that I had bought a while ago with one of my spreads with a synthetic, and waited, and it popped on Friday. This is Pure Storage, and I bought it probably back about 6 weeks ago, and it really wasn't going anywhere. Little moves. Look here, it's $1 range, but it broke out. Doesn't make any money, but this is Pure Storage. It's kind of where it's reversed in the past. I wouldn't be chasing it here. Western Digital. Put this on a weekly. You see a huge uptrend here, sideways pullback. Great earnings per share growth. Its peer, Seagate, has had a rough time. This one's in a weekly bongo red, but it's got good earnings per share growth, much higher than its PE. This might be something to look at. Hewlett Packard, almost identical pattern. Brocade is a takeout. That's it on computer storage. Banks, this is interesting to see them up here, but regional banks, for whatever reason, look strong on Friday. Maybe it was something at Jackson Hole. It's certainly not interest rates. Here is a international bank. I don't know if this is Spanish, Argentinian. Let's see if we can tell. Argentina breaking out here. And that was the only bank above the industry group. U.S. Bancorp. Zions also look good. Good relatively. It's got earnings per share growth. It pays a dividend. Sideways move. There's something I liked about Zions. Oh yeah, it broke above the 50 here, and there's a high close doji, had a PSAR reversal. When I think of regional banks, I think of KRE, which will probably look a lot like some of these charts. And hard for me to be living there again. I don't expect regional banks to be leading right now with interest rates horrible. Semiconductor devices, I do like this one a lot. Marvell, it's on my buy watch list, as you'll see. Why do I like it? It had a Bible gap, or not a Bible gap, but a mobile breakout from a squeeze. Kahuna had a pocket pivot on Friday. Look at the earnings per share growth rate. Look at the PE, pays a small dividend. I do like Marvell Tech, although the group has been in this dark gray, has been anything but strong of late. Xilinx has had a big run, similar pattern without the earnings per share growth. Most of these have been beaten up, and I wouldn't have any interest in them. Footwear, who would think that one? Philip Van Heusen, I guess they owned a lot of brands. When I was growing up, they used to be shirts. Nice uptrend, $128 stock. I don't like the earnings are all over the place. Don't know anything about it, but it's got a bongo green. It's in an uptrend, hit a Bible gap up on Thursday, gave back a little bit on Friday. Pocket pivots and kahunas. Can't really comment, not my group. Fossil looks like the retail apparels. Ralph Lauren breaking above the 200. Similar for G3 and Hanesbrand. So these look a little bit better than some of the other groups that we've seen. We've seen some really lousy groups. Communication equipment. Apple should have an exposition coming up soon, or symposium where they introduce the 10th edition of the iPhone. Look, it's been choppy. All right, I can't say it's not, but it's sitting near the high of the year. Bongo green, clear uptrend, some growth in revenue, but in earnings, multiple of 18, small dividend. I think this will be interesting based upon the acceptance of the new iPhone, how delayed it's going to be. Cisco, no. Acacia, one of the many optical names that have been built up. I don't see anything else there that I like. And then very quickly, I want just to look at marine shipping because several of these showed up, and I thought this was interesting. Here's the index. I did that backwards, but that's the index. So let's go right click, change the index group. So these have had a big move. Now something they got nice patterns, pull up, sort of a cup, handle low in the cup, so that would leak. Not a perfect pattern, but it's in a bongo green, kahuna, trending up, not extended, high jump bar down here, doesn't make any money, trades 500,000 shares a day, earnings are out. This is Scorpio bulkers. All right, that looks interesting for growth. Star bulk, similar patterns, already moved up further, does have a little bit more earnings per share growth. Golden Ocean, breaking out to new highs. So I don't own any of these, but I'm tempted based upon those three looking so good. So now I've done that. What else do I do as part of my review? The strength of TradeStation is two pieces. During the day, it is radar screen. So during the day, I'm going to have my watch list, which is right here. And I'm going to be watching it during the day, looking for new things flashing. So this tells me on Getty Oil here, is that what that's not Getty, hold on. On Guess Jeans, which we just looked at, that on the daily chart, I've got a new, since it's, go back to Getty, to Guess. Since it's not flashing, that tells me that not on the last day, or the current day, which would still be Friday, but on the day before on Thursday, I'd have PPS buy signal. This one's flashing, which is Huntsman Oil, or Huntsman Corporation, and this is telling me that on the current day, on the daily, let's see, I have a high closed doji. That's why that's orange. So I will use this during the day to find stocks that are breaking up. I got daily, weekly signals. If I keep going further, I've got pivots and resistance, and I've got monthly signals I can look for. And then for those that use my HGSI material, including me, I have other radar screens that include things like pocket pivots, Bible gap ups, when are earnings coming out, mobile breakouts from a squeeze, mobile breakdowns from a squeeze, what stocks are squeezing, and then green candle lows and red candle highs. So a lot of the things that I like to use, I'm scanning during the day. So radar screen and TradeStation is why you buy TradeStation. The equivalent in Thinkorswim is MarketWatch. Now in MarketWatch, I'm scanning here for kahunas, high close and low close dojis, pocket pivots, Bible gap ups, how long to the next earnings date. All right, so those tell me it's more than 30 days. I've got 9-7 on cons, and there's no earnings on the ERX. All right, so this is limited to about 100 instruments. Radar screen is to 1,000. Almost any indicator in TradeStation I can put in radar screen. I can do similar on MarketWatch. So I like radar screen because the number, as well as the number of people that write software for TradeStation. The scanner, let's just go to one of my other windows. It's easier to see. The scanner in TradeStation is pretty awesome because I could scan all stocks for JP buy number 2. So these are stocks that have a buy signal occurring near pivot support, and the weekly has to be in a buy as well. So let's look at First Solar. So let's go over to back to my other view. Actually, I have it here, so I'm going to here. So it's going to open up First Solar. And what we should see is a new buy signal. That's probably not, that's going to confuse people, so let me get it off of that one. Go over here. And let's just go to type First Solar, FSLR. So I should have a weekly and a buy signal based upon that scan. Come on. Got a lot of things running here. It takes a little bit of time to have my charts open up. So here's the daily. Here's the pivot right here. And I have a new buy signal coming in close to the pivot. On the weekly, we're in a buy signal, and we've been pulling back. So I've got a pullback in an uptrend with a new buy signal. Then I would go into my HGSI charts and say, what does First Solar look like? And so I use the scanner to scan a large number of stocks, like 8,000 stocks. I might filter them on price and volume, and things like, see a little pullback here, maybe something to look at. So I'm able to scan for, go back into the one that's easier to see. I run on bigger monitors. That just doesn't work well on this, but it is what it is. So I can look at various John Person indicators. I can look for high closed dojis, low closed dojis. That one's old, so I want to delete that. Yeah. So here's high closed dojis on Friday. These are some of the best signals that I use. I have a number of scans with Elders materials. George and I put together some scans. I've got scans that are a combination of some of the HGSI indicators. And the nice thing about this is I set this to run at 6 p.m. every day. By the time I'm done with dinner, I can start to look at a list of stocks. Now, this scanner waits for the bar to be complete, which means I can't look at a daily scan until 4:15. One of the advantages of Thinkorswim is it too has a great scanner, and it scans as if the market is closed, and no matter what time I run it. So this actually scanned for PPS buy signals with positive MACD divergence. And here's that Schlumberger and something called UMA made it to my list. Let's just look at UMA. I don't know UMA. Sounds like a woman's name, not to be sexist. UMA. The advantage of a scanner is simple. A scanner looks at a very large number of stocks and looks for a specific signal and may help you find things like UMA that I wasn't thinking about. Now it looks like, all right, it's a telecommunications carrier, had a big move on Friday with a kahuna. I'm not saying to buy UMA. So I scan things during the day in Thinkorswim. I scan things end of day, typically in TradeStation. I look at radar screen intraday on both. Let's just finish with my buy screen of the things that I thought looked interesting this week and maybe point out a couple. It's a smaller list than normal. Again, I think there is still balance risk to this market, but I am biased towards the downside. I'm going to go through these rapid fast. If I've looked at it already, I'm just going to say that and move forward. We're going to look at daily charts, and I've ranked them by momentum. ANF. Downtrend, something happened, 2 kahunas in a row, big volume coming in, a viable gap up. I'm going long Abercrombie & Fitch this week, like the 6.5% dividend. Well, unless something changes between now and then. Marvell Tech, one of my favorite semis. Guess, similar to ANF. Western Digital. You notice each of these top 4 or 5 stocks we saw in the top 10 industries. Western Digital, we looked at. HollyFrontier is a refiner. It pays a 4.5% dividend, something I want to put on my watch list, depending on how Harvey was. Vale and the iron ore stocks we looked at already. Esperion, this is a biotech, no revenue yet. It's got a drug for lipid lowering that looks interesting. It had a bounce here off of support with a kahuna. High risk stock, I have a position in it. I have a spread, actually. Sherwin-Williams, I think of them as paint and boring, but this has been anything but a boring stock over the last several years. All your stocks should look like that from lower left to upper right. That's a 2.5 times since November 12 in a shallow pullback. and it looks like it's starting to go back up. Here is a bank. It's a U.S. bank, not a foreign bank. It had some potential litigation with the feds, which they dropped this past week, and it's recovered some. Owings Corning, what a nice tight, currently not back on the left, but on the right, lower left, upper right. Cyrus One, someone's got to store the data centers for the cloud. A REIT pays a nice dividend. CVOE Holdings, wow, what a nice chart. Eros International, a media. I don't know, this made my list because I think on the persons. Let me just look at this because I can't remember why I put this one in here. My wife would say it's because I'm going senile, but let's just look at it. There was something I liked about Eros. I think I know what. So you'll notice here is I have an auto trend line creator for TradeStation. So it had a buy signal on the trend line. It's in a weekly buy signal, and you know, person's trend catcher is trending up on both the daily and the weekly. I thought this might be the beginning of something. I'm going to watch it. I'm not necessarily going to buy it. It has a massive PE. Tech, we already pointed you, one of my favorite ore stocks. Methanex is a specialty chemical stock. Uptrend sideways, sitting in a squeeze with two kahunas, a couple pocket pivots, and breaking out. I like that pattern. Here's one of my tankers. Tech Data, they sell technology. Lower left, upper right, not exactly tight, but breaking out here after pullback to the 50. Everything's green above. Here's another carrier, another carrier. Here's one of the gold stocks. This was a junior gold that I liked for this week if gold breaks out. This is Osisko Gold Royalties, probably Japanese based upon that name, but breaking out here, pocket pivots and kahunas. Let me say this again. This is a gold stock I like this week if gold gets above resistance. Primoris Services, don't know anything about them except lower left, upper right, looks like it's breaking out. Here's a small biotech. I have no idea. I had a couple of kahunas. If I don't see it on the HGSI stock, I can almost guarantee you I'm going to see it here. Because the HGSI stock isn't having all my indicators. So here's a stock that has been basing. It's got a PPS buy signal. It broke above something called last conditional change. It had a high close doji a week ago. Right, so this is in on some of the person signals. Not a great looking regular chart. It's an IPO. It's probably safer to wait till it takes out the top. Not going to buy it, going to track it. Douglas Emmett is a REIT. It made my list because it's the kahuna here, the volume picking up. But the weekly bond was still red, so it's got some fleas. Huntsman is a chemical company, lower left, upper right. Looks like it's cycling up again. Royal Gold is sort of a big kahuna gold stock. It's been in a nice uptrend leader. If gold breaks out, I'll add to my position. Chemet, like Marvel, is my other favorite semiconductor stock. Look at the earnings per share growth. Look at the multiple. Lower left, upper right, a little bit extended off the 50. Ambarella has earnings out this week. I put it there to watch. Here's a REIT, pays a 3.7% dividend. Breaking above the 50. Lots of kahunas and pocket pivots. Another small gold play. Here's a financial stock. Don't know anything about it, but a 10% dividend. Breaking out to new highs. No idea what OEC does. Another chemical maker. So this is the third specialty chemical stock that made my list. That's interesting. Bank of Colombia, International Bank, and then another investment brokerage, 5.6% dividend. Another REIT, 4% dividend. Another REIT, 8% dividend. Another REIT, 4% dividend. Another REIT, 5.2% dividend. Why do I think so many REITs look good? because interest rates are falling. REITs are outstanding. It's cheaper for them to borrow, and their 4 and 5% yields look more attractive to the users. So those are the stocks I like. Clearly, if I go back to this, let's just put it in a scorecard view, which is my more traditional ranking. The bulkers, CBOE, some of these I liked a lot. Some of the ones I pointed out that I wasn't sure why they're in there, we're mostly in for watching them. On that note, I'm going to say goodbye. Have a great week. My bias would be to the downside, but that's mostly because we're going into September. We're overdue. I watch too much TV.